And let's look at this rally this morning and what's behind it. Futures extending the move yesterday. News of a short-term deal to raise the debt ceiling, lifting sentiment this morning. And late yesterday, all three major indices erasing a sharp decline early in the session to finish up 102 points on the Dow. Joining me right now is Mohamed El-Erian. He is the Queen's College Cambridge president and Allianz and Gramercy advisor. Also joining the conversation all morning long this morning is Mark Tepper and Angela Morabito. Mohamed, great to see you this morning. Thanks so much for joining the conversation.
Thank you for having me, Maria.
I want to talk about what the macro story looks like from your standpoint, Mohamed. You have been a student of this macro story and policy for decades, and get your take on what you're seeing in terms of the backdrop, growth, and supporting the stock market, and, of course, our investing ideas. How do you see things today?
So in the short term, somewhat less uncertain because of what you talked about, the debt ceiling, but also in Europe, because Russia has signaled that it may increase energy supplies. So two major short-term uncertainties have come down. However, when you go beyond that, there are major uncertainties. The global recovery is slowing. China is slowing. Inflation is an issue. As you know, I am not of the view that inflation is just transitory. And there's a lot of geopolitical tension. So short-term, less uncertain, and the market certainly has welcomed that. Longer term, there are some major uncertainties that the market will have to navigate.
Yeah, Mohamed, let me get into some of those important items that you just mentioned. Let me start with oil prices. This morning, pulling back from multi-year highs reached this week. Crude inventories unexpectedly up by 2.3 million barrels last week. And UK natural gas prices were down 36% yesterday from the highs after Putin said that Russia is ready to help stabilize global markets. What do you think that means? Give us the Russia angle here with regard to oil and what that means for nat gas and oil over the near term.
So I think the market got a little bit carried away, especially in gas, and got carried away for good reasons. Not only did you have a supply shortage, but you had China announce that they had to secure all their supplies for the winter. So you had people accelerating, bringing to today the demands of tomorrow. So you had this massive short-term imbalance. Now that Russia says they're willing to increase supplies, but people are still wondering, what does Russia want in return? So it's not clear whether this is a long-term solution or not. But more generally, something that we're going to be talking about for quite a while, and we have already, is supply disruption. We've gone from a world where demand was the problem to a world where supply is a problem. And the whole world is experiencing these supply disruptions.
Yeah, apparently Russia is looking for long-term contracts, is willing to increase supply only for the long term. And I wonder if that's going to impact the macro story, Mohamed, because, you know, in the past, when you see oil prices move higher, that could act as a hindrance to economic growth. We've got the September jobs report out tomorrow. Again, here we have to look at the fact that the extended unemployment benefits going away. What does that mean for the jobs picture? Economists are expecting 500,000 jobs added to the economy last month, with the unemployment rate ticking slightly lower to 5.1%. And, of course, we've got special coverage tomorrow at 8 a.m. Eastern on the jobs number. What do you think we are seeing in terms of the labor market right now, kicked off with this September report? Because the background has changed here, right, with the unemployment benefits going away.
They have, but the labor market hasn't responded to the degree that some people thought, which suggests a couple of things. One is that we may be seeing a change in people's willingness to work in certain professions. That explains why we have 10 million vacancies, even though the employment rate isn't back to what it was before the pandemic. You can think in this regard of all the people who have thought this is the time to retire because they're worried about the safety of their place. You could think of professions under enormous pressure, certainly in healthcare, certainly truck drivers. So there's a host of questions about, has the propensity to work changed? And then secondly, there are questions about childcare, about schools. So we're going to see, no one has an answer, Maria, as of yet, as to how this labor market is going to function. We hope it gets back to normal. By normal, I mean labor participation goes up and we create a lot of jobs, but there's a lot of question marks.
Mohamed, how are you allocating capital or advising to allocate capital in the face of all of these uncertainties, at least over the near term? We're talking about the debt ceiling deal perhaps putting us to December in terms of wondering what happens next in terms of the debt ceiling. You've got this inflation story continuing, uncertainty over a reconciliation package. So you've got policy here, inflation here. How do you want to allocate capital? What are you saying?
So if you're a short-term investor, what you really need to be looking at is the Federal Reserve and whether it can taper, reduce its asset purchases in an orderly fashion. That is the most important determinant for the next few weeks. If you're longer term, you've got to recognize that there's a lot of fluidity, a lot of moving pieces. So don't make any non-recoverable mistakes. Most mistakes in the investment world can be recovered over time, but there are a few that are non-recovered. Default is a perfect example of a non-recoverable mistake, which means a lot of granular analysis. Make sure that you embrace longer-term themes, and you need active management for this world. It's a different environment than what we had in the last few years because of what's happening on the supply side.
Mohamed, it's great to talk with you. Thanks so much for weighing in this morning. Great to see you, sir.
Thank you for having me.